program is still open. Here's what nonprofits need to know, which will include a presentation by Tracy Ward, Director of Self-Help Ventures Funds SBA 504 loan program at Self-Help Federal Credit Union, a political update from NPNA, and we ask that you stay through till the end for our Q&A section. We have some questions already submitted, but we still encourage you to submit any questions via the chat, and we hope to get to all of them today. So to begin today's program, it is my pleasure to introduce, just to go over, we covered our agenda. Sorry. To begin today's program, it is my pleasure to introduce Nicole Malaku, Executive Director of NPNA.
Thank you so much, Kevin, and welcome everyone to today's webinar. NPNA, as many of you know, is a national network of 41 immigrant and refugee serving organizations working in 37 states to promote immigrant integration at the state, local, and federal level. We continue our work to expand and provide TA around COVID response and recovery efforts, including PPP, and supporting immigrant small businesses access to be able to fully access and forgive PPP funds. NPNA is a proud partner of Cook County, Illinois, and grateful for the Cook County Recovery Initiative and its partners, including the American Business Immigration Coalition, ABIC, Illinois Restaurant Association, President Preckwinkle of Cook County, and Self-Help Credit Union to ensure that PPP is accessible to all of our small businesses and nonprofit organizations in Cook County, Illinois. NPNA's work with Cook County over the last year is demonstrative in many ways of how effective partnerships can support equitable relief and recovery work, and is a model that we hope to replicate in cities and counties across the country with many of our partners. We'll continue to work with our partners to advocate for continued federal support for Congress to support small business and allocate funding specifically for minority-owned small businesses that have been hardest hit by the pandemic. Once again, we'd like to thank our partners from Self-Help Federal Credit Union and Cook County for helping plan and put together today's webinar. So the goals, as Kevin stated for the webinar, are to recap all the changes with PPP, which is now in round 3, and what nonprofit and small businesses can do at this time to access the program. We will have a significant amount of time to answer any questions you might have, and really look forward to this conversation. So without further ado, I will turn it over back to my colleague, Kevin Olukai, who will talk about the latest updates to the PPP program. Kevin?
Thank you so much, Nicole, for the welcome. I will now be giving a brief update on where the Paycheck Protection Program stands today. Some of these details will be covered in greater detail by Tracy Ward in her presentation. On March 30th, President Biden signed a bill extending the deadline for applications to May 31st. This bill also gives the federal government until June 30th to apply, to process the applications. And so we recommend you apply sooner, as certain institutions will stop accepting applications before the deadline to make sure they can process the loans in time. As of April 18th, 2021, 9.8 million loans have been approved, totaling $762 billion, leaving $51 billion left in the program, pending any possible future increases in funding for the program. Next slide. The latest round of PPP included the following changes in eligibility. The PPP funding formula has been revised so that sole proprietors, independent contractors, and self-employed individuals can receive more financial support. It eliminated an exclusionary restrictions on PPP access for small business owners with prior non-fraud felony conviction. Also eliminated PPP restrictions on business owners by eliminating student loan debt delinquency and default as a disqualifier for PPP. And the newest round also ensures access for non-citizen small business owners, allowing them to use tax identification number to apply for a PPP loan. Next slide. Businesses are also still eligible for a second draw loan if they meet the following criteria. If you've used your first PPP loan, if your business was operational before February 15th of 2020, your business is still open and operational, you have no more than 300 employees, and if you can show a 25% or greater reduction in gross revenue. Next slide. Businesses are also eligible for forgiveness for both their first and second draw loans. Of the loans dispersed in 2020, 227 billion of the 521 billion total loans dispersed have been forgiven. As of today, the forgiveness deadline is still 10 months after the covered period of their loan. After the 10-month period, payments are no longer deferred. So you still want to get your loan forgiveness applications within the 10-month period after your loans covered period. And you can apply for forgiveness through your lender that you received your PPP loan from, and you are eligible for loan forgiveness if you meet the following criteria. Next slide. Nonprofits and small businesses, we recommend that if you are a prospective applicant, to apply as soon as possible. You can either apply for your first or second draw loan today. Prospective applicants can reach out to their own financial institutions or any SBA approved lender to begin the application process. You are allowed to apply through multiple lenders until you have been approved by one, and it is recommended that you apply through multiple lenders. If you need help finding a lender, please visit sba.gov and utilize their lender match program. And we also recommend that you keep an eye out for possible local and state small business loan and grant programs. With the passage of the federal relief programs, local municipalities and state governments have received funding, and they have the opportunity to possibly create a more loan and grant programs. So keep an eye out for local updates. Next, we are going to introduce Tracy Ward, Director of Self-Help Ventures Fund's SBA 504 loan program at Self-Help Federal Credit Union. Tracy's presentation will include, once again, an overview of PPP and eligibility. We want to make sure this is very clear to prospective applicants. Tracy will also cover the loan application and forgiveness process and more. Tracy, you can take it away.
Thanks a lot, Kevin. So as Kevin said, I work with Self-Help. We've been making PPP loans since the program began last year. And so we'll try and cover a general overview and then go through some of the process and some of the things we're seeing to hopefully answer some of the questions you're having. Next slide. And we jump to the next slide. So just big picture overview, the Paycheck Protection Program is a loan program that was intended to help small businesses and nonprofits keep your staff employed and to help you keep operating so that you get through the COVID-19 crisis. There's no collateral required, no personal guarantee from the owners, no fees. There's no credit check for you to get this loan. It is based on the amount that you need to keep paying your staff. These loans are 100% forgivable if you meet certain requirements. So ideally, it turns into a grant and you never have to repay it. But you must meet these requirements. You must use at least 60% of the loan on payroll costs and the rest for other eligible costs. We'll talk a little bit more about what those are. You have to use it within 24 weeks of the date that you receive those loan funds. And you have to maintain your staff and compensation levels. There are many exceptions to this last requirement, so we'll talk through that in a little more detail as well. But if you meet that group of requirements, then this becomes a grant to you. You don't have to pay it back. If you don't meet all of those requirements, then whatever portion that you don't meet the requirements for, you would have to pay back as a loan at 1% interest. Next slide. So general eligibility requirements, and this is true for any PPP loan. So whether you're applying for your very first PPP loan or whether you already got a PPP loan and you're coming back to the lender to apply for a second PPP loan, these requirements you need to be able to meet. So you need to be an eligible entity. So most small businesses and nonprofits are eligible now. Sole proprietors, self-employed individuals, independent contractors, you're eligible for a PPP loan. Churches, faith-based organizations, although normally there's a challenge with getting government financing, you are specifically eligible for PPP funding. Nonprofits are eligible. Every nonprofit now, this has been expanded over time by Congress. Any nonprofit under the Internal Revenue Code section 501c, you are eligible except for 501c4 nonprofits. Congress has continued to exclude 501c4s, but if you're a 501c3, 501c6, any other subsection, you are eligible for PPP. A second requirement that you have to meet to be eligible is you must have been operating on February 15th, 2020. Congress put this in place specifically to help existing organizations survive COVID. So if your organization did not start operating until after February 15th of 2020, unfortunately, PPP is not a program that you can access. To show you were operating on February 15th, 2020, you will need to show, if you're employing others, you need to show that you were paying staff during that time period. So your payroll records from February of 2020 will meet that requirement. If you don't have employees, you're self-employed, you are your only employee, then you're going to need to provide information showing that you were self-employed in February of 2020. If you operate a seasonal operation, so maybe February is not the month, maybe summer months are when you operate. There are exceptions for you. So you can show you are operating basically for any 12-week period in that full February 2019 to February 2020 year, and you'd still be eligible. A third requirement that you need to meet to be eligible for a PPP loan is you have to be small under SBA standards. So that means you can't have more than 500 employees. This includes all your affiliates. So if you operate through one entity, but you are affiliated, have control of other entities, you look at all those together in most cases. There are a few exceptions to that as well. If you are coming back for a second PPP loan, those restrictions, the threshold is a little lower at 300 employees. And one thing to remember here for the nonprofits, if you're a 501c3, you have to meet a slightly less harsh threshold. It's looking at each physical location. So as long as you don't have more than, if it's your first PPP, as long as you don't have more than 500 employees at any physical location, for your 501c3, you'd be eligible. And same is true for the second, it's just 300 employees per location. Fourth requirement is you must be able to certify that at the time you apply for your PPP loan, you are facing current economic uncertainty because of COVID-19. In most cases, that is probably a pretty easy certification to make, but it is one that you need to think about. For some larger nonprofits or larger small businesses, you may have access to other resources. You may be in some type of situation where the impact of COVID is not really affecting you as much. So you'll just want to take that into consideration and be comfortable that you can certify that when you apply for the loan, the economic uncertainty because of COVID is causing a concern that it's going to impact your operations. And then finally, you need to be still operating, or if you've had to shut down, maybe because of COVID, you intend to reopen. Because these funds are intended to help businesses and nonprofits keep operating and get through COVID and continue paying the owners or the employees, if you have permanently closed, you're not eligible for a PPP loan. Next slide, please. So there are additional requirements if you're coming back to apply for your second PPP loan. One thing you have to be able to show and be able to certify is that you used your first PPP loan for eligible purposes. So if you haven't used all of your first PPP loan yet, you're not eligible to apply for a second PPP loan. Think about this as use of your PPP loan generally is going to take you between 8 and 24 weeks. Because these loans are set up to provide funds for you to pay your staff for 2 to 2.5 months, it's generally going to take you about 2.5 months at a minimum to use that first loan. You are allowed to take up to 24 weeks, so you may take longer, but you just need to make sure that you have used your first PPP loan before you apply for a second. If you're self-employed, in most cases for sole proprietors and self-employed individuals, we're seeing that you don't have a lot of eligible uses for your PPP funds other than paying yourself, kind of your lost income, your payroll as the owner, the self-employed person. If that's your use, then it's going to take you about 11 weeks to use your first PPP loan. Again, this is based on SBA's calculation of about 2.5 months of your lost income, your payroll as owner. And SBA does not allow you as the owner to pay yourself more or at a faster rate. So it's going to take you 2.5 months to use your first PPP loan in that case. The good news is SBA does not require that your first PPP loan be forgiven before you apply for your second PPP loan. As long as you've used those funds for eligible purposes, you are allowed to apply for your second PPP loan. There's a second big requirement though for a second PPP loan. Congress wanted to make sure that they were getting additional funds to the businesses and nonprofits that had been hit the hardest. And so they're not available to every business and nonprofit. You are only eligible for a second PPP loan if you have had at least a 25% reduction in gross receipts in 2020 as compared to 2019. This is, you can look at this either on a quarterly basis or annually. So if your second quarter of 2020, you had to shut down right as COVID was hitting, a lot of states and different locations put in shutdown orders, or maybe your customers just completely disappeared because COVID was hitting. So maybe second quarter of 2020, you had a terrible month and had very little income from your business. But the second quarter of 2019, you compare it to that was a normal quarter, and you can easily show that in 2020, you had at least 25% or more reduction in receipts, then you're eligible for second PPP loan. For a lot of businesses and nonprofits, it may be easier to do an annual comparison. In 2020, you only brought in $50,000 from your business, and in 2019, you brought in $100,000. Well, that's easy. You've obviously had more than a 25% reduction in receipts. So it's fine if there's only one quarter that shows that, but for a lot of you, it's easier to just look at the full year. When you're thinking about how to calculate this reduction in gross receipts, SBA defines gross receipts the same way that it's defined for federal income tax purposes or for federal tax filing purposes if you're a nonprofit filing a 990. So that is based on kind of the Internal Revenue Code. It's section 6033 if you're really excited about digging into that definition. But the best way to think about it is if this is something, this income or revenue is something that would count as gross receipts for your tax return, then that's something you should be counting as gross receipts when you're doing this comparison between 2020 and 2019. So for nonprofits, that is essentially all revenue from all sources. When you're doing your 990, you enter your gross receipts and then you deduct certain expenses. You reduce that amount for your 990 by the cost of generating that revenue. You aren't able to do that for purposes of PPP. It is your total revenue from all sources. So your membership dues, donations, if you have interest income, if you have, you know, proceeds from business activities that your nonprofit conducts, all of that counts as gross receipts, and you'll compare 2020 or 1/4 of 2020 to 2019 or to that same quarter of 2019. I think for nonprofits, things that don't count as gross receipts or income receipts, revenues that don't count as gross receipts are typically only donated in-kind services and facilities and unrealized gains and losses. So pretty much everything else you're going to consider in this comparison. Big thing to remember, you would not count the income from your first PPP loan, and you would not count any income if you received an SBA Economic Injury Disaster Loan advance. Both of those are expressly excluded from this calculation. So the fact that you got your first PPP loan in third quarter of 2020 doesn't bump up your third quarter 2020 income to make this hard to do. If, again, you might have received other grants or income that is not taxable as federal income, and in that case, you wouldn't include them. But anything that would fall as something that you would include on your federal 990 or your federal tax return if you're a business as a gross receipt, you would count. I've also put a link here to some SBA guidance that really walks through how to calculate this. If you want to refer to that, that's on the SBA's website. Next slide. So the application process, you've sort of gotten through, you're eligible, and you're starting the process to apply. Check with your lender. Each lender may have a slightly different process. Most are using an online application. That's how Self-Help is doing it. And so you will go online, you will apply, and then we'll work with you through the application to make sure that we're getting the information we're required to collect and to try and help you maximize and make sure you're getting the loan amount that you are supposed to be getting. I would recommend that you review SBA's application form. Their application form, they're on the website. They have one for first draw applicants, a different one for first draw applicants if you file Schedule C to file your business taxes. That's self-employed individuals, sole proprietors, some independent contractors and LLCs. If you file your business taxes on Schedule C, there is now a separate application form for you, both for first and second PPP loans, that helps calculate your loan amount, because that's improved now due to some really good changes that the Biden administration put forth at the beginning of March. If you file your business taxes on Schedule C, your loan amount calculation is a lot more favorable now. For most Schedule C filers we're working with, it's making a significant difference in giving you a much larger loan amount that's a lot more helpful in helping you get through these COVID challenges. But look at those paper applications. Sometimes when you're doing an online application, it's easy to skim and miss anything that you're not specifically having to fill in an answer for. Read through these paper SBA applications and the certifications, because you're signing this application. You are making these certifications and saying that everything on here is true. And you don't want to be in a situation where you have certified something that was not true. So look at those when you're thinking about applying for this. Collect your documentation. Your lender is going to require and going to collect from you a copy of your photo ID, unexpired U.S. federal or state government issued photo ID. That's for the owner who's going to sign the application and the note. If you're a nonprofit, one of your directors, your board member, whoever is going to sign these documents on behalf of the nonprofit, that's who you're going to provide the ID for. Couple of things I want to flag here. Self-help and some other lenders we've heard the same issue from. You are eligible as a business owner to apply for a PPP loan if you have an I-10. If you are an immigrant that's in the US lawfully, but you don't have a social security number, you are still eligible for a PPP loan. We're working through some issues with SBA right now. Both self-help and several other lenders that we work with and talk with about these issues are finding that SBA is rejecting any I-10 number if the middle digits are not between 90 and 99. And we're trying to work through that with SBA. Our understanding is that I-10 numbers with other middle digits are either expiring this year or are numbers that have expired in prior years, but you can get that renewed. And once you can show, if you can document that you've renewed your I-10, this should not continue to be an issue. It should be fine for you to move forward and get your PPP loan. But we're running into a bit of a challenge right now. And so hopefully that'll be resolved soon. But just to flag for you, that is a current issue. We're trying to work with SBA to get that corrected so that if you can document your I-10 has been renewed, that you can still move forward and get your funding. Another documentation you're going to want to pull together for your lender, you're going to need to be able to show, because it's a requirement to be eligible for the loan, that you are operating and paying staff on February 15th, 2020. If you have employees, again, a payroll statement from February 2020 should document that. If you are self-employed, so Schedule C filer or 1065, partner in a 1065, SBA considers self-employed. For you, you're going to want to provide a February 2020 bank account statement and business invoices dated, in February, showing that you had business activity in February of 2020. We're also having some pushback from SBA if your bank account is a personal bank account versus a business bank account. But again, we and other lenders are trying to work through that with SBA, especially self-employed or really small businesses. You may not have a separate business bank account, and you should not have to have a separate business bank account. So we've been able to work through that with SBA. Sometimes they require a little bit of additional documentation, but that's a challenge. Just know you may have to provide additional documentation that you were self-employed in February of 2020 if you don't have a business bank account. Next slide, please. So more documentation you're going to want to collect. You need to be able to document your payroll costs, because that is what your loan amount is based on. If you have no payroll costs, you're not eligible for a PPP loan. So if you have employees, that is your quarterly 941s, the quarterly state and local employee wage and unemployment insurance filings that you have to do each quarter for your state. If any payments by the employer for employee health and retirement benefits, those are the documents you're going to want to collect and get to your lender. A tip here, if you're working with a full service payroll processor, they can provide a report that has all of this information in it. SBA says if they can get an equivalent report from a payroll processor, then that's acceptable instead of all of these underlying tax filings. But the key there is it has to be equivalent. It has to have all the information in it that would be in your 941s, all the information that would be in your state quarterly filings. So in most cases, a full service provider can get you that. If you're self-employed, you're going to show your payroll cost, what SBA is calling your payroll cost as owner, by showing your tax return. So if you're a Schedule C filer, that's a copy of your Schedule C. Small farmers and ranchers, copy of your Schedule F. Partners in a partnership, copy of your 1065 K1. These are really the only categories that SBA is calling self-employed. So sole proprietors, independent contractors, small farmers and ranchers. If you're filing these types of tax returns, you're considered self-employed. Additional documents, if you're one of these groups and you're considered self-employed, SBA requires you to provide some documentation showing that for the year you're asking for this loan, 2019 or 2020, that you were self-employed that year. So if you've got 1099s that you received as an independent contractor, that documents that. If you get 1099Ks for debit card transactions, that documents that. In some cases, we've used your bank account and business invoices throughout the year. That's kind of intrusive. You're having to give a lot of information. So we use that as a last resort, but that is one way that you can document you are self-employed. And then if it's a second PPP loan, you're going to want to collect documentation to show that you had that 25% reduction in gross receipts. If your loan amount is over $150,000, you're going to have to provide that to your lender as part of the application. If your loan's 150 or less, you don't have to provide it when you apply for the loan, but when you come back to apply for forgiveness, you do have to provide this documentation. So go ahead and pull this together up front so that you're confident you met this requirement, so that you're confident you will actually be forgiven and not have to pay this back. Next slide. So this just walks through how your loan amount is calculated. It is for first PPP loans, your average monthly payroll times 2.5. If you are applying for a second PPP loan, for most borrowers, it's that same calculation, your average monthly payroll times 2.5. If you are in the food service or accommodations business, so about inns, hotels, B&Bs, or restaurants, food trucks, caterers, bars, any business that has a business activity code, a NAICS code, these are called, that starts with 72 is eligible for getting a larger loan. So your average monthly payroll times 3.5. So if you are in one of these industries, you're going to want to pay attention to that so that you get the funding, the extra funding you're entitled to. And you'll find your business activity code, your NAICS code, on your tax return. Your tax return filing asks for that. And so if your number you entered there started with 72, you're eligible. There are some, if for some reason you neglected to enter that on your 2019 tax return and it's blank, there are other ways you can document, you know, with your permits or other licenses to show that you're in this industry, but it becomes much more challenging. So just look to your tax return and that should resolve it. Again, I've put the links to SBA guidance on calculating your first PPP loan and on calculating your second PPP loan. These are on SBA's website at www.sba.gov, and they're very helpful in really walking you through for your type of business how to calculate it. Next slide, please. Since that calculation is based on your average monthly payroll, just want to highlight what is your average monthly payroll. If you are an organization, a small business or a nonprofit that has employees, your average monthly payroll is basically your annual compensation, benefits, and state and local taxes divided by 12. So you get your average monthly. If you are self-employed, so you're a sole proprietor, self-employed individual, independent contractor, single member LLC, small farmer or rancher, or a partner in a partnership, then your average monthly payroll is determined based on your tax filing. If you're Schedule C filer, that is line 9, your gross income on your Schedule C. That's your annual payroll, and you divide that by 12 to get what SBA is considering your average monthly payroll. Next slide. So hopefully you've gotten through all of that. You've gotten your loan. What can you use it for? It's really important. You have to use at least 60% for payroll costs, or your loan will not be forgiven. Essentially, think about this as whatever amount you use for payroll costs, divide that by 60, and that's the maximum forgiveness you can get. So if you get a $100,000 PPP loan and you're only able to use 50,000 for payroll costs, then the maximum that you can be forgiven, even if you use all of the rest for eligible purposes, is going to be around 83,000. So you want to use at least 60% for payroll costs so that you can ensure you get the whole loan forgiven. There's no exception to that rule, so really focus on that. And again, payroll costs are calculated exactly the same way at forgiveness that they were calculated when you apply. So if something is a payroll cost for determining your loan amount, it'll be a payroll cost for forgiveness. You have to use these funds within 8 to 24 weeks of the date you receive them. So just make sure you're using them for at least 60% of them for payroll within 24 weeks of the day you get the fund. It's fine to use the whole thing for payroll, and that is the easiest, least documentation at forgiveness if you use the whole thing for payroll, but there are other eligible uses. Really quickly, while we're talking about using it for payroll costs, I do want to flag a couple of areas that SBA would consider double dipping. You really can't claim forgiveness for PPP if your payroll was paid for through other federal funds. So this comes up in a couple of ways. If you are self-employed and you have been drawing unemployment compensation, if you get a PPP loan, that PPP loan is covering your payroll as a self-employed person for 2.5 months. So for that roughly 11-week period, once you receive your PPP loan, you need to stop drawing unemployment. Once you've gotten through that 11-week period, you can restart. You can go back to your state unemployment office and start drawing again, but you can't draw unemployment at the same time that PPP is paying your payroll. Employee retention credits. Originally, businesses and nonprofits were not allowed to claim employee retention credits if they got a PPP loan. Congress changed that in December to allow you to access both programs, but not for the same payroll. So if PPP covered your July and August payroll, you can't also claim employee retention credits for July and August, but you could for other months of the year that was eligible. And then finally, federal grants. This comes up with a lot of our nonprofits. You may be receiving federal grants that are specifically targeted to covering your payroll for certain operations. So you would not claim forgiveness for PPP payroll for weeks or months or periods that are covered by some other federal grant. But try and keep those things in mind as you're thinking about using your funds. Non-payroll costs, if you have interest payments on business debt, rent or lease payments for your business, utility payments for your business, as long as those agreements were in place prior to February 15th, 2020, you can use your PPP loan to pay those things. Congress added some additional eligible uses to try and help be a little bit more flexible and allow more businesses and nonprofits to get fully forgiven. So now if you have used funds for worker protection, so maybe you had to buy masks for your employees or put up shields so that your customers and employees can interact safely, those costs are eligible. If you had property damage that insurance didn't cover because of some of the public protests, those costs to fix that damage can be eligible. Supplier costs. If you had some kind of contract, like your business, it's essential, your business can't operate unless you have bread. Say you're a sandwich shop. Your business can't operate without bread. That is an essential supply for your business. And so if you use PPP funds to buy bread so that you can make the sandwiches, that is an eligible cost now. Certain operations expenditures. So if you use software for billing or inventory tracking or payroll, SBA now allows that to be an eligible cost. So this hopefully gives you a little more flexibility. Again, remember, you can't use more than 40% of your PPP loan for these non-payroll costs, but at least you have a few more options here. Next slide, please. The final requirement that you need to meet to make sure you get fully forgiven is you need to maintain staff and wage levels. Really important, if your PPP loan is $50,000 or less, SBA is exempting you from this requirement. You don't have to worry about maintaining staff and wage levels if your loan is $50,000 or less. If your loan is over $50,000 though, and that's even if it's $50,001, then you do have to maintain staff and wage levels. There are lots of exceptions to this requirement. And so if you have had to reduce your staff's hourly pay, or if you have had to reduce your total number of staff, then you'll want to really look closely at those exceptions. But if you reduce these things and you don't meet any of the exceptions, it would reduce the amount that you're allowed to be forgiven. So you would have, a partial loan that you would pay back. Next slide. Just highlight some of these exceptions. One, whether it's reducing the hourly wage or reducing the having to let a person go entirely. If you restore the hourly wage or restore, give that person their position back before the end of your covered period, your 24-week period for using the loan, then no harm, no foul. It doesn't count against you. It doesn't harm your forgiveness. So that's one option. You also may have situations that are exceptions because they're out of your control, really, or they're understandable. You may offer an employee their position back and they may say, no, thank you. That doesn't count against you. If you've tried to fill an open position with someone who's similarly qualified and you can't find a qualified applicant to fill that role, that doesn't count against you. You may have to fire an employee for cause. It happens sometimes, and that won't count against you. You're going to want to be able to document these things, though. So if SBA does review your loan and wants to question this, that you can show them, no, I meet this exception, and then you'll be fine. Then there's one much broader exception that has been helpful for a lot of the small businesses we've worked with and some of the nonprofits as well. Even if you don't meet any of these other exceptions, but you've had to reduce your staff or you've had to reduce their average hourly wages of the staff that you've kept, if your organization was unable to operate during your covered period, your 24 weeks for using the loan, at the same level of business activity you operated at prior to that. Maybe you've had to close and shut down. Maybe you just don't have the same level of customers because of COVID. If you are not operating at that same level of pre-COVID business activity, then you are exempted from this. You would just want to show, how that affected your operations, and you would want to show that you were complying with some COVID-related guidance, either federal, state, local, as long as this impact was because you were complying with this guidance, then that will exempt you from this as well, and you would not have your forgiveness reduced. Next slide, please. So the forgiveness process, I want to spend a few minutes talking through this and just highlight a couple of areas. One, you will apply for forgiveness with the lender that made your loan. So check with your lender. Different lenders have different processes for how they're doing this. I think most are doing an online forgiveness process. That's what Self-Help is doing. And the timeline may be different. For instance, last fall, we were advising all of our PPP borrowers that it might make sense to wait to apply for forgiveness because we knew Congress was working on and considering some changes that could be really favorable. and make forgiveness easier and also make full forgiveness much more likely. A lot of our borrowers took our advice and waited. And so we now have a lot that we're working with. So we're working with them now. Happily, Congress did make a lot of those changes that were expected at the end of December. They made the process much more streamlined, especially for borrowers with loans up to $150,000. It's kind of a one-page form now. You don't have to submit a lot of, at least some of the documentation you don't have to submit with your request generally. So it's made it much simpler and much easier. And because Congress expanded, made a little more flexible the time period for using your PPP funds and some of the other uses that were added, even for loan sizes larger than 150,000, the process got easier and the likelihood of forgiveness got better. So check with your lender. Some lenders have processed most. I think across the country, maybe about half of the first PPP loans have gone through the forgiveness process. I will say our experience has been that SBA will try to work very hard with us to try to get to full forgiveness, even on loans where they initially may have a question about some of the documentation. They've been good about working with us to try and figure out, can we document this in a way that the loan can be fully forgiven? So we've been pleased that they're working towards that. But of course, if you did not meet the requirements, they won't fully forgive it. But we've seen a very good forgiveness rate. I will add here, we and other lenders are seeing on the larger loans, definitely the loans over $2 million that were made. SBA is taking much longer than promised to review those forgiveness applications. They technically were supposed to review those within 90 days, but if the loan is over $2 million, SBA is required by Congress to review that before they sign off on forgiveness. And we're finding, and other lenders are finding, that SBA is not able in most cases to meet that 90-day period. They're taking much longer. So if you have one of those larger loans and it's been sitting at SBA for a while, that's not necessarily a red flag, not necessarily a cause for concern. They are just literally the volume of what SBA is tasked with right now, as they're working on so many COVID relief programs, is really stretching them pretty thin. So it is taking longer for them to review some of these. Other issues or other things we're seeing around forgiveness. When PPP was introduced last year and the first few rounds of PPP loans were made, most attention was focused, as I think it should have been, on getting those dollars out the door as quickly as possible so that small businesses and nonprofits got that money quickly and could use it and survive. SBA, because of that speed, did not do a lot of the typical background checks they do on borrowers before they approve a loan. So since that period, SBA has been going back and doing those background checks and running business and nonprofits and their owners through all of SBA's databases and government databases to see, are there issues that would make this loan ineligible? And so they are reaching back out as lenders apply or as borrowers apply for forgiveness to, if they found these issues, to try and get the borrower and the lender to resolve them. So you may see holds on things like that. That is also causing a delay for some second PPP loans, because these issues, if they found something that was of concern to them, that has to be resolved before they'll approve the second PPP loan or forgiveness. And sometimes these are very minor things. Maybe the digits of the EIN got inverted, and so they just need to confirm the correct EIN. They may find that based on their research, they're concerned that the business was not operating before February 15th, 2020. So we would work with you to try and get documentation to show that, yeah, you were. So things like that can snag and slow it down are a source of frustration right now. We have seen some improvement, but that is kind of what's going on behind the scenes if you're in that situation where it seems to be taking longer than it should. Communicate with your lender. They should be communicating with you and explaining what's going on so you know where things stand. And the timing on when you have to apply for forgiveness. So you are permitted to apply for forgiveness at any point before your PPP loan matures. So if you got your PPP loan before June of last year, you had a 2-year term. So you had 2 years from when you got it to apply for forgiveness. If you've gotten your loan, received your PPP loan anytime since June of 2020, then you have a 5-year term, and you can technically apply for forgiveness anytime within that 5-year term. But you really do want to apply within 10 months of when you've used those funds. Essentially, think about this as 15 and a half months from the date you got your loan. You want to apply for forgiveness within that period, 15 and a half months from the date you got it. That's the 24-week period for use plus 10 months. If you apply within that time frame, that 15 and a half month time frame, then you shouldn't have to start paying payments on your loan. Your loan stays deferred for that whole period. And that's true no matter what your note said. Earlier notes would have had a shorter period, but your loan will stay deferred until SBA processes your forgiveness if you apply for forgiveness within about 15 and a half months of when you got the funds. If you miss that window, you have to start making monthly loan payments. You still might be fully forgiven and then you would be reimbursed, but you don't want to ever have to make loan payments if you have the option of this being a grant. So meet that window, work with your lender. All lenders should be working with you well in advance of that deadline. I think that was kind of everything I wanted to make sure we highlighted, but I'm happy now to, I think we have a Q&A session. I'm sure there are lots of good detailed questions for us.
Thank you, Tracy, for that thorough presentation. We have a few minutes to move on to our Q&A section. Participants can submit questions, but given the time that we have, we're going to try to get through as many as we can. So we'll start off with one of the questions that came in through the chat. Can you give examples of secured debt interest payments?
Yes. So if your business has a mortgage on your building that you operate out of, or a facility you have a mortgage, the interest on that mortgage is eligible. If your business has an equipment loan, the interest on those equipment loan payments are eligible. Not the principal portion, but the interest portion of the payment you could count.
Great. There was also another question that came in regarding the ITIN applications, and you spoke about that. So this person asked if, so to understand greater, was self-help successful in getting ITIN loans, and how could they find more information?
So we have been, right now, we have not been successful if the middle digits are 90 to 99. Sorry, unless the middle digits are 90 to 99. We've raised this issue with SBA that just because other middle digits are expired or expiring, the I-10 holder may have gotten that renewed. And if the I-10 holder is giving us documentation from IRS showing that this number has been renewed, it's a valid number. We're very frustrated right now. We've talked to other lenders that are as well. I do think this will be resolved. I think this must be just some miscommunication. So I am very hopeful. But right now, we're not able to get an approval for an I-10 borrower unless the middle digits of the IRN are 90 to 99. So hopefully better news soon on that, but that's what we're arguing about right now. So I'm hopeful we'll see a change.
Another question came in through the chat. As a nonprofit that had a surplus by the end of the 2020 operating year, is it still eligible to apply for forgiveness from that loan?
Yes, so if I'm understanding, you applied for your first PPP loan, you were facing economic uncertainty, but then you had a better year than you thought you were going to have. That's not a problem for a nonprofit or a small business. It's, you know, you were certifying economic uncertainty at the time you applied for the loan. If that was an accurate certification at the time, it's not going to affect your forgiveness if you happen to, luckily, not be as impacted as you thought you were going to be.
Thank you. We also had some questions come in earlier. If a business applies to the program in May, will funding for minority businesses be prioritized? Is money running out? I can answer this question. So Congress did set aside $15 billion for first and second draw PPP loans issued by community financial institutions, which typically serve minority, women, and veteran-owned businesses. The status on the specific funding is not available. However, the SBA is making sure they're taking efforts to ensure equitable access for minority-owned businesses, and some of these include they've set aside dedicated hours to process and assist the smallest PPP lenders with their PPP loans, and the SBA is working to get more lenders approved that work with in minority and underbanked communities, and that is why it's recommended that applicants go through multiple lenders and try applying through smaller SBA-approved institutions. And I would say that this administration is making an effort to make sure minority businesses are better represented in the PPP program, and you have a better chance now than you did before. Another question: a company rejected my application for insufficient documentation. Can I still get a loan? From what I understand, if you were rejected because you didn't have the proper documentation when you applied, you can try again with the proper documentation. But you can in different lenders do have different documentation requirements. So as long as you're eligible, you can keep trying to apply through multiple lenders. Tracy, I don't know if you have anything to add for that question.
No, I think that's it exactly. If you've got the documentation SBA requires, apply.
Okay, it looks like we have reached the end of our Q&A time. So that brings us to the close of our webinar. We want to thank Nicole for being here today, and especially want to thank Tracy for providing her expertise and support over the last year as we've been trying to support small businesses and nonprofits. So we really appreciate everything you've done and everything Self-Help has done for us. We'd also like to invite everyone to our upcoming webinar, which will be on April 27th, Rebuilding Stronger Together, a deep dive into the Cook County Recovery Initiative. The presentation and recording and resources from the webinar will be emailed to all who've registered, along with additional resources and contact information if you need technical assistance. I just want to say thank you again to our presenter and our partners, and we hope everyone has a good day.